We use money every day. Whether it's buying groceries, paying for a coffee, or saving for a rainy day, money is an integral part of our lives. But what is money really? At its core, money is a concept, a tool that facilitates trade and economic activity. It's a medium of exchange, allowing us to trade goods and services without the complications of barter. It's also a store of value, enabling us to save and accumulate wealth over time. For most of human history, we used things like shells or gold as money. These items were valuable and widely accepted. This evolved into coins and paper money, which were easier to carry and standardized in value. Now we have digital forms of money. With the advent of technology, our financial transactions have become more convenient and instantaneous. Think credit cards and online transactions. These digital tools have revolutionized the way we handle money. The way we use and think about money is always changing. From physical coins to digital transactions, the evolution of money reflects our changing needs and technological advancements. The future of money is digital. As we move further into the digital age, the concept of money continues to evolve. Central bank digital currencies, or CBDCs, are at the forefront of this revolution. These are digital forms of a country's official currency, issued and regulated by the central bank. These are not cryptocurrencies like Bitcoin. Unlike decentralized cryptocurrencies, CBDCs are backed by the government and have the same legal status as physical money. They are digital versions of a country's official currency. Imagine the US dollar, but in a digital format that you can use for everyday transactions. Imagine the US dollar, but digital. This digital transformation aims to make transactions more efficient and secure. The rise of digital payments and the decline of cash have paved the way for CBDCs. As more people adopt digital payment methods, the need for physical cash diminishes. Governments around the world are exploring their potential. They are looking into how CBDCs can improve financial inclusion, reduce costs, and enhance the efficiency of the financial system. They could reshape the financial landscape as we know it. The introduction of CBDCs could lead to new financial products and services, changing the way we interact with money. Understanding CBDCs is crucial to navigating the future of finance. As we stand on the brink of this financial revolution, staying informed will help us adapt to the changes ahead. Imagine a dollar bill. You can hold it, feel it, and use it to buy things. It's physical money that you can touch. Now imagine that same dollar bill existing only as ones and zeros on a computer network. No physical form, just digital data. That's the basic idea behind a CBDC, or central bank digital currency. It's a digital form of money issued by a central authority. Essentially, it's a digital version of a country's currency, designed to be used just like traditional money, but in a digital format. It is issued and regulated by the country's central bank, just like traditional money. This ensures its legitimacy and stability. Unlike cryptocurrencies such as Bitcoin or Ethereum, CBDCs are centralized. This means they are controlled by a central authority. This central control provides stability and trust, as the value of the CBDC is backed by the central bank and the government. Their value is directly tied to the national currency, ensuring that 1 unit of CBDC is always equivalent to 1 unit of the physical currency. This one-to-one equivalence means that the digital currency can be used interchangeably with physical money, making transactions seamless. Think of it like this: your bank account balance is already digital. You don't hold the physical cash, but you know it's there. You can check your balance online, transfer money, and make payments, all without ever touching physical cash. A CBDC would be similar in that it exists digitally. The key difference is that it would be a direct claim on the central bank. This means that instead of being a claim on a commercial bank like your current digital bank balance, it would be a claim on the central bank itself, providing an extra layer of security and trust. How are CBDCs different from the money in your pocket? The main difference is physical existence. Your dollars and cents are tangible. CBDCs would exist purely in the digital realm. Think of paying with your phone. That's similar to how CBDCs could work. This digital nature could make transactions faster and more efficient. Traditional money relies on physical infrastructure. Banks, ATMs, and armored trucks are all part of the system. CBDCs could streamline this. They could reduce the need for intermediaries. This could lead to lower transaction costs. Imagine sending money internationally. With CBDCs, it could be as easy as sending an email. CBDCs and cryptocurrencies are both digital, but that's where the similarities end. Cryptocurrencies like Bitcoin are decentralized. No single entity controls them. This makes them volatile. Their value can fluctuate wildly. CBDCs, on the other hand, are centralized. Their value is pegged to the national currency. This makes them more stable. Cryptocurrencies offer anonymity. This appeals to some users. However, it also raises concerns about illicit activities. CBDCs being centralized could offer more transparency. This could help prevent fraud and money laundering. Governments are looking for ways to regulate cryptocurrencies. CBDCs could be a way to provide a safer, more regulated alternative. Section 5. The promise of CBDCs. Benefits and advantages. CBDCs could revolutionize the way we use money. They could make transactions faster, cheaper, and more secure. Imagine sending money across borders instantly, or paying for groceries with the tap of your phone. CBDCs could make this a reality. Financial inclusion is another potential benefit. Millions of people around the world lack access to traditional banking. CBDCs could provide a digital alternative. This could empower individuals and boost economic growth. Governments could use CBDCs to distribute aid directly to citizens. This would be more efficient and less prone to corruption. Section 6. The perils of CBDCs, risks and concerns. Despite the potential benefits, CBDCs also come with risks. Privacy is a major concern. Central banks would have access to individuals' transaction histories. This raises questions about data security and potential misuse. Striking a balance between security and privacy will be crucial. The impact on traditional banks is another concern. If people switch to CBDCs, what happens to commercial banks? They could face a loss of deposits and revenue. This could disrupt the entire financial system. Central banks will need to carefully manage the transition to CBDCs. They will need to ensure stability in the financial system. Section 7. CBDCs in action. Real-world examples. Several countries are already experimenting with CBDCs. China is leading the way with its digital yuan. It is being tested in several cities across the country. The Bahamas has launched its own digital currency, the sand dollar. It aims to provide financial services to its remote islands. Sweden is also exploring a digital version of its currency, the e-krona. The European Central Bank is developing a digital euro. These are just a few examples of the global interest in CBDCs. The coming years will be crucial in determining their success and adoption. Section 8. The future of finance, CBDCs, and the global economy. Central bank digital currencies, or CBDCs, have the potential to transform the global financial system in ways we are only beginning to understand. These digital currencies issued by central banks could revolutionize how we think about money and transactions. They could usher in a new era of faster, cheaper, and more inclusive finance. Imagine being able to send money across the globe in seconds, with minimal fees, and without the need for intermediaries. This could be a game changer for both individuals and businesses. Imagine a world without the need for physical cash. Digital wallets could replace traditional wallets, making transactions more convenient and secure. This shift could also reduce the costs associated with printing and handling physical money. Cross-border payments would be seamless, eliminating the delays and high costs currently associated with international transactions. This could facilitate global trade and economic growth, making it easier for businesses to operate across borders. Financial inclusion would reach new heights. People in remote or underserved areas could gain access to financial services through their mobile devices, bridging the gap between the banked and unbanked populations. However, challenges remain. Privacy concerns must be addressed. As transactions become more digital, the risk of data breaches and surveillance increases. Ensuring that CBDCs are designed with robust privacy protections will be crucial to gaining public trust. The role of traditional banks needs to be redefined. Banks will need to adapt to this new digital landscape, finding ways to integrate CBDCs into their existing services while continuing to provide value to their customers. The success of CBDCs will depend on collaboration. Governments, central banks, and the private sector will need to work together to create a cohesive and efficient system that benefits everyone. Governments, central banks, and the private sector will need to work together. This collaboration will be essential in addressing the technical, regulatory, and social challenges that come with implementing CBDCs on a global scale. The future of money is being written right now. As we stand on the brink of this digital revolution, the decisions we make today will shape the financial landscape of tomorrow. And CBDCs are at the forefront of this digital revolution.